Crypto Hotep here with another investing video. We are on week 88 of the family portfolio and dividends tracker. Really appreciate everyone who has viewed these videos and supported the channel. It is greatly appreciated. Before I jump in here, guys, as always, none of these videos are financial advice. Please do your own due diligence when researching stocks or investing your hard-earned money into these assets. Okay. Also, if this is your first time watching these videos, feel free to go to the channel, go to week number 1, and that's where I go through my whole methodology and why I'm doing this. Basically, every week, we go through my family's portfolio. So what I did was I shortlisted several stocks of well-known companies for my family to choose from. They chose from them. We made a list, and we created portfolios within the broker M1 Finance, and you'll see in a second how we did it. And then every week we go through this portfolio, we go through market news, we go through dividends, deposits, balances, and overall how we're feeling about the markets. But the first thing is these videos are for my own edification, first and foremost, and they're to track the investment journey with my family. If you find them helpful, feel free to like, subscribe, comment, share it. Let me know what you think, guys, and let me know what you're investing in as well. So with that being said, guys, before we go to week 88 and before we go back to week 87, let's look at some market news because it was a very volatile week. So this week was CPI week. So CPI is the inflation numbers for the US, and inflation is the point at which things increase in cost, if you will, year over year. And typically inflation is supposed to be around 3%. That's a quote unquote acceptable number. But as we've seen before, inflation has increased and spiked to levels like 6 and 7%, which is astronomical. So on December 18th, the CPI numbers were released, and the least thing to say is they were a surprise. So the CPI numbers were forecasted at 3%. The actual numbers came in at 2.6%, almost 40 basis points lower than what was expected. That is a good surprise, but it is a very, very way off, just way off release. These numbers haven't been this low since March 2021, to put in perspective here. And if you're scratching your head saying, well, Crypto Hotep, everything's still expensive, groceries are expensive, everything seems to be out of hand, you are correct. Things are priced very dramatically right now. However, some things aren't, one of them being gas. Gas is at the lowest it's ever been. So there is an offset somewhere there. So just to keep that in mind. But the markets did like that. You can see that here. Markets did like that a lot. And the other thing that did happen this week was Bank of Japan. So Bank of Japan released a statement saying that they were going to be raising their interest rates by a quarter basis point to 0.75% from 0.5%. Okay, markets actually did like that. Now, the reason I'm bringing Bank of Japan up, because you may be scratching your head on that too, like what does that have to do with America? Well, Bank of Japan for many years, they had interest rates very, very low, i.e. 0.5% interest rates. And what that means is you could borrow, right? You could borrow the yen and you then cash that out, use the cash to buy certain items or assets like Bitcoin, like American tech stocks, and those type of things. And that's what people would do, because you could literally borrow that money at a significantly low interest rate, sometimes almost negative overnight, and not feel the burden of that. So the big thing was the headlines was that Bank of Japan is raising interest rates. The whole world's ending. The market is crushing. Bitcoin's going to go to zero because this is doing that. And it really didn't happen like that. They raised the interest rate. But here's where I believe the markets actually liked this fact, because the markets already knew they were raising the interest rate. But the way they brought it out in this statement, I think was very bullish. So specifically around here, where it says U.S. economy and the impact of trade policies as it relates to the raised rate. While uncertainties remain, they have declined. And that's it. So I think this is very bullish for the markets because it shows that, yeah, there are some things that they can't really explain. There are some uncertainties abound. However, they've decreased. So if they've decreased, that means things have gotten better. So that is a bullish statement. And so I think that's why the markets have been acting positively towards that. But with that being said, guys, we'll jump into, let's go to week 87 really quickly. Okay, so week 87 saw us with a balance of $3,729.39, 18.5% money weighted rate of return year to date, market gain of $419.45, and then dividends earned of $33.63. For this week, we are at a balance of $3,748.82. Money weighted rate of return year to date of 18.21%, market gain of $415.15, and $33.83 in dividends were paid out. So what actually happened between this week and last week? Between this week and last week, we actually had a ton of dividend payments. Okay, so we had dividend payments from Cintas, old Realty company here, Google, Coca-Cola, McDonalds, and Waste Management. Now, if this is your first time watching a video and you're scoffing at these numbers of 37 cents here, 8 cents there, 4 cents there, just know that with these dividends, we're not focused on the actual number that the dividend's coming out at. We're focused on the fact that we're getting dividend payments every quarter or every month, and we want to keep that going because there's a snowball effect. And dividend investing is a marathon. It's not a sprint. And remember, you're investing in good quality companies, and for somebody to pay you just for holding those companies is a tremendous thing. So it's more of building bigger positions. So potentially those dividend payments can be bigger as well. In addition to that, we had a buy. So we bought some Costco with these dividend payments. Okay. We also had 2 buys here for Sony and McDonald's. Okay, so we added to that. And then this was a deposit week. So we did deposit some money into the account. Again, this is your first time watching the video and you're seeing the deposit. Yes, it's only $20. We have been able to increase our balance in this account with just very modest payments. And that's one of the reasons why I want to document this too, because I want to document this journey to show that you can build wealth on very modest income and modest deposits. So with those deposits we did buy, or with that deposit I should say, we did buy some Microsoft, we bought some Waste Management, Sony, Cintas, and some more Costco too. Can never have enough Costco. Okay, and let's go to our portfolio review, bottom to top, as we always do. At the bottom, unfortunately, is our middle, but we are in the green. Everybody's in the green in my family. I love to see it. So our middle has a balance, I should say, of $491.45. Money weighted rate of return of 11.32%. Dividends earned of $4.16. Market gain of $29.52. Target again is at Achilles heel here. Costco is down double digits here. Not worried about it though. And then Starbucks is down, but again, if you've been following the channel, you know that we were red with Starbucks for majority of the year. We have closed that gap with Starbucks. Okay. Other than that, we have huge winners here. We have Sony, Tesla up over 47%, Google up over a staggering 114%, and then Amazon is trending in the green now finally. And I said this a couple weeks ago. I said, watch out for Amazon, up over 6.5%. Okay. Let's go to our youngest. Our youngest has a balance cracking $533.36. Dividends earned of $2.51. Money weighted rate of return of 17.15%. And a market gain of $53. So our youngest only has 5 holdings. We have Tesla up over 45%. Starbucks, which we said we're actually in the green in our youngest with Starbucks. Apple's having a tremendous year, up over 24% on Apple year to date. Costco down over 9%, 9.5%, I should say. And then Sony is up over 11%. So just solid portfolio, solid companies here. There's really nothing more you can say here. Let's go to my wife's portfolio. Again, up over 500 at $542.95 for her balance. Money weighted rate of return of 53.17% year to date. Market gain of $128.14. Dividends earned of $3.85 here. So with my wife, very similar, 5 holdings, right? So the number of holdings is very similar. Google, up over 100% on Google. Love to see it. Pepsi, almost 10% on Pepsi. Tesla, up over 60.5%. 60.50% on Tesla. That's huge. And then Celsius up almost 60%. This portfolio is almost all in the green with the exception of Microsoft, but we are just building that position out with Microsoft. So it's going to be a little bit on the low end, but there's a tremendous portfolio here for my wife. Let's go to my portfolio. My portfolio saw a balance cracking $1,088.05. Money weighted rate of return year to date of 16.23%. Dividends earned of $16.40. Market gain of $109.33. So technology with mine has been the anchor all year. Still continues to do so here. Finance, though, finance has seen a mixed bag this year, but it's slowly getting into the green. Visa and Moody's, compounders, there's really nothing you can say about those. Industrials and energy, we bought the dip on these today. So I did place buys for both of these, as you guys saw. So we bought Waste Management, and we bought some Cintas. And these are two companies that I'm always going to be forever bullish on, just because the fundamentals are there 100%. They've been time tested, battle tested here, and they're not going anywhere. So I know they're down right now, but it kind of is what it is. So we did buy the dip on there. Real estate, that was old Realty company. We're steadily getting that income from this holding here. Pharmaceutical is just AbbVie, and AbbVie's been one of my favorite holdings. It's just been doing gangbusters here. Consumer staples and shopping is Lowe's and Costco, down over 5.25% here. And then restaurants and food are Coca-Cola and then Domino's Pizza. So the GOAT, Coca-Cola, is doing what GOATs do. Double digits here year to date, 13.5%. And then Domino's Pizza, obviously, we're just trying to close the gap and trying to lower our cost basis there. Overall, I can't be mad at over 16% gain for my portfolio year to date. Some people will scoff at that and say, oh, you need to be at 20, 25%. You know what? I'm good. I'm good with the number of stocks I have and the gains. I'm good. And then last but not least, let's go to our oldest. Our oldest has a balance almost cracking $1,100 at $1,093.01. Market gain of year to date money weighted rate of return of 12.47%. Market gain of $95.16 and dividends earned of $6.91. Probably the most simplistic portfolio we have out of anybody. Only 4 holdings, but those 4 holdings are doing numbers. Apple up over 17%. McDonald's up over 12% for McDonald's. That's crazy. And then Tesla up over 28.5%. Costco, we are down a little double digits here, but again, Costco is always going to Costco. We will continue to buy Costco. But all in all, just a very good portfolio for our oldest. It's been the same thing since week 1, except for Tesla. Tesla we added after a couple months or so, but it's been the same thing, and it's worked. So you can't deny it. Can't deny it, guys. So for week 88, the balance is $3,748.82. Money weighted rate of return of 18.21%. Dividends earned of $33.83. Market gain of $415.15, guys. If these videos were helpful at all, feel free to like, subscribe, comment. Let me know what you think. Let me know what you guys are investing in as well. And please share the video. And as always, guys, thank you and happy investing.